Appreciate it. So I'm an EA. A lot of people get confused about that. Basically, it's an accountant, federally licensed tax practitioner empowered by the U.S. Department of the Treasury's Internal Revenue Service. So I took a series of 3 exams to become an EA. An accountant, I can do anything from representing somebody in front of the IRS to completing tax returns and speaking on their behalf. I work for Brohl Tax Accounting. I'll get to the breakdown of the team here in a second. A little bit about me. This is my family here. I'm one of 5. My brother and my 3 sisters. Some of the things I like to do. I like to snowboard. Been to a few different states, Colorado, Utah, over in Wyoming even. And this is in Utah a couple years ago. So I enjoyed the winter a little bit here in the state of Michigan. I do also like to golf. That was a golf trip this year with some high school buddies. And then housing projects. So my dad was a woodshop teacher in high school, or high school woodshop teacher. And so in the summers, he would build with a buddy of his who was also a teacher. And I got to, whether or not I liked it or not, got to join him sometimes in the summer and help him out. So picked up a few skills along the way, and I hated it then and weirdly kind of enjoy it now. So that's a picture of me blowing a bunch of insulation in my attic. This is the Brohl Tax team. So we have Lisa there in the top left. She does bookkeeping for us and some of the administrative stuff during the busy tax season. You have myself, you have Steve Brohl, and then Brett. Both those are accountants as well. And we have Bogey here. That's Steve's dog. He's there every single day of the tax season. He's our Chief Happiness Officer, or CHO, and Employee of the Month 2 years running. So that's just finished my, or I shouldn't say just, but I've done 3 seasons with Brohl Tax and over 1,000 tax returns so far. What do I do for my clients? Individual tax returns, small business, Schedule C, S Corps, C Corps. What makes us, I think, a little bit different than other firms is that, we don't charge an hourly fee outside of tax season. Our fee that we charge to do the tax return encompasses both the tax return and then also any kind of tax planning strategy outside of tax season. We're not trying to nickel and dime people and charge them an hourly fee. So we do that a lot this time of the year right now. We avoid doing that during the tax season. It also helps to kind of get, part of the way into the year, halfway through the year, take a look at what, if it's a business owner, what they've made in the first half of the year, project that out for the rest of the year, and get an estimated, tax payments and things like that, and update that information and make sure they don't have a huge tax bill at the end of the year. And then IRS notices and resolutions. This year's been difficult, especially with the state of Michigan, changed up their system, and they sent out a bunch of fraudulent letters that they shouldn't have sent out. So we do those as well, help people kind of resolve any of those that they get, and we don't charge an additional fee for doing stuff like that. All right, so what I want to talk about today is the sole proprietor problem. Sole proprietor is single member LLC, where all your net profit is subject to self-employment tax. The 2 ways that you're kind of taxed is your income tax, your federal income tax, or your state income tax. So your federal income tax, you have the different tax brackets depending on your income, anywhere from 10 to 37%. And then the state of Michigan is a flat 4.25%. The other way you're taxed, if you look at like your W-2, you have the first line, your income, and then below that you have your Social Security, and then below that you have your Medicare tax. If you're a W-2 employee, you pay half of that. Okay, so 7.25 or 65%. If you're self-employed, you get to pay both sides of that. So your Schedule C, you pay 15.3% for Social Security and Medicare taxes on top of the federal and state income tax. Nailed that. All right. Forget that for a second. So I wanted to make a comparison here between Schedule C and an S Corp. So you're a small business owner, you file your tax return, and you do the Schedule C, which is part of your individual 1040 tax return. Okay. You have similar situations here. 115,000 you make in gross income minus business expenses. Subtract 15,000 from that. You have a net profit of $100,000. S Corp, same thing. 115,000. Subtract out your business expenses of 15,000. You have $100,000 in net profit. S Corp is a flow-through entity, meaning the S Corp corporation itself does not pay the taxes. It flows through to the business owner or the shareholder, if you will. Okay. So Schedule C, $100,000, your tax, fed and state level. Okay, same amount. S Corp, you have two ways of being paid. You have the K-1 and the W-2. So as an S Corp, it's a business. You have a separate EIN for that, basically a social security number for a business. And that corporation, again, is passed through. You have two ways of paying yourself. You have the distribution or K-1. That's the separate tax return besides the 1040. That's the S Corp is a K-1. It's a distribution of money to shareholders, and then which is also still taxed at the federal and state tax level on your individual tax return. And then you have W-2 income, or you can pay yourself as a W-2 employee of your own business. Okay, so again, you're still going to be taxed at the federal and state tax level. So here's where the fun kicks in. So talking about that self-employment tax again, you have for the Schedule C, the self-employment tax, paying the entire amount, both the employee and the employer side, of 15.3%. You're going to have a tax bill, including your federal and state taxes, of $15,300. Okay. Now we look at S Corp. You have the distribution, and then you have the W-2. The W-2, you still have to pay both the employee and the employer portion of the self-employment tax of 15.3%, but it's only on this $30,000 that you're paying yourself. That is a fair and reasonable compensation amount, depending on what your job is. The IRS does scrutinize, so you have to be careful on how much you pay yourself in W-2 income. You can't just pay yourself $1, say and think that that's what you're worth, I guess. It really does depend on what your job title is or what you do for work, and that number would change and fluctuate based on that. But that self-employment tax, then you're paying both sides. You're paying $4,590 in self-employment tax, and the distribution does not count towards income or self-employment income. Okay. So you'd save roughly $10,310 in this example. Okay. The differences or pros or cons of doing this type of tax strategy or business entity structure. Reason to do it, tax savings, obviously, as I just showed you. Your business consistently earns more than a reasonable compensation amount. Again, if you're making $50,000 and your reasonable compensation for what you do is $50,000 roughly, it's really not worth it then. Probably should just stick with Schedule C because you can't really, again, the IRS does scrutinize that reasonable compensation. You can qualify for QBI deduction. I won't get into that right now. Increased liability protection. Because you have a separate entity, again, it's kind of an increased level of protection, not just an LLC, but also the fact that it's a complete different business entity with a different EIN. Easier to transfer business and can make business look a little more established. I'd actually be curious if, depending on for loans and things like that, if a business entity, I think, makes it a little more established, it separates a little bit more from the individual, lenders may look more favorably on that. Maybe. May not be worth it. Reduces Social Security income in retirement. So on that previous slide there, I showed you the W-2 income, that Social Security, Medicare tax. Your Social Security income in retirement is dependent on how much you pay in Social Security throughout your working career. Now, in my opinion, if you take that savings from self-employment tax savings and invest some of that money, you're going to get a higher rate of return and have more money, in my opinion, in retirement than you would from Social Security payout. Also, Social Security is capped. So at some point, the reasonable compensation is probably going to be enough to get you close to maximizing Social Security income anyways. And then the last one is there is an additional payroll service for yourself. You can do it yourself where you pay yourself, and you have to, because you're W-2, you have to make sure you file a W-2 for your employee, which is yourself, which is kind of confusing. But that is an additional expense if you have somebody else do it. And then tax preparation, that is a separate tax, like I said, the form, the 1120 or the K-1 for the business entity is a separate tax return. So now you have both your individual tax return and then the S Corp tax return. For me, my perfect referral, anyone starting a business or side hustle, business owners frustrated with current accountant, people who just had a big life change, or anyone who sold a home, property, or investment. That's pretty much a lot of the examples of why people call into us, usually during tax season. They had a life event like buying or selling a house and want to make sure they get the proper exclusions. And then, yeah, sometimes, accountants get overbooked and have too many clients, and people want to feel like they're important. And we try to make sure to, follow up with clients and make sure that we do tax returns in a timely manner. We're communicating with them and making sure that they feel like we are spending enough time on their returns. Things to listen for, people who say, I dread tax season, I just started a business, got a letter from the IRS, I sold a house this year, things like that. Who do I help best? That example I showed you there with the difference between Schedule C and S Corp, I think it's, you usually can't go to an H&R Block. Don't quote me on this, but I don't think they do S Corp returns and things like that. So, we really differentiate ourselves by working with business owners, sole proprietors, self-employed people, freelancers, 1099 contractors, landlords and real estate investors, new homeowners and growing families, retirees managing income and withdrawals. And that's another picture of Bogey. Any questions?
So if you did get that, you said fraudulent letter from the state of Michigan, like you got to check where it's supposed to get, what are you supposed to do with that?
It depends. I mean, if it's legit, I shouldn't say fraudulent. They sent out a bunch of incorrect letters that their system had flagged as there was an issue and there really wasn't an issue. So it depends. I can take a look at it if you got one. Yeah. All else fails, cash it for sure.
What is the difference between an EA and a CPA?
So EA, again, accountant can represent anybody with taxes and prepare tax returns. The biggest difference would be more on the auditing side. So whether or not you work for like the IRS or you want to work for a firm that does financial audits for companies, there is no auditing. You have to be a CPA in order to do audits, which I'm good.
Yeah, that's for you. Do you have any contacts in the IRS?
I do not. I think Steve does though.
I really need your help right now. Wow.
Okay.
And I have some clients that need some tax preparers.
Well, let's talk then.
She will absolutely use you.
Sounds good. Sorry, I missed Creighton here.
What is the favorite place you've ever snowboarded?
Favorite place I've snowboarded? I would say Utah. I think primarily because we were able to go to we stayed in Salt Lake. We were able to go to 2 or 3 different locations and stay in the same spot. Whereas in Colorado, you got to drive a little further and stay up in the mountains. So, yeah.
So a lot of software tax companies offer like auditing insurance or something like that. If you get audited, it's hard. Is that something that you guys do as well? If a company is under an audit, if there's some sort of protection barrier or cushion, if there's any inconsistencies?
So we've I think Steve said he's only had like 2 audits in his entire time. Those were with his own clients. Would we do that for someone else potentially? That's where we get into whether or not somebody would need official financial breakdown of their business, and so may not, it would depend on the situation, I guess. A good question. Follow up on that one. Anybody else? All right, thank you.